So I think this is funny.
Yeah. They've invested a lot in the last few years.
Yes, they have.
That's a big drop, guys. There's a lot that's going to happen. That's what concerns me. Come compete. Amazon stock absolutely owns my brain. I look at it and I think Amazon's been a company that I haven't understood the valuation of Amazon since I started caring about doing individual companies. And I bet against it a while back and I got smoked on it. Now, they lead in AWS, but if you look at their number, it's funny. I see on Twitter sometimes, and by the way, follow me on Twitter and follow Mo on Twitter if you want to. I see on Twitter sometimes people saying, hey, no-brainer stocks. And they mention 2 or 3 stocks that are no-brainers to me, and then they mention Amazon. I'm like, man, Amazon to me right now is in the too hard pile. And the reason being is I haven't seen the profit in all sectors of their business that makes me feel comfortable.
Basically one sector.
Yes, AWS is their big driver of profit. And do I see that they're investing to make their distribution better? Listen, this weekend I ordered 3 things from Amazon and within 12 hours, all 3 were delivered.
Yeah.
Do I love it? Absolutely. Will I use it for the rest of my life? Hopefully, you know what I mean? But I just look at it going, but they're not making money off that.
That's gotta be so
it goes up and down. Yeah. Now, they are increasing their market, their average. So we sell a lot on Amazon through one of our brands called Fit Active Sports. And we spend a lot of money advertising our products on Amazon. It's basically like Google AdWords, but for Amazon. Because Amazon's smart. They're like, listen, come compete. Come advertise, use keywords, pay per click, all that stuff. I love it. But again, look at it thinking to myself, how do we get there? So now, Mo, you have Amazon launches Bedrock for generative AI, escalating AI. Now we're in the AI war.
Yeah, so now we're in the AI war. Bedrock is a new AWS cloud service, allows developers to build and scale generative AI chatbots. So now they're in that world. And I'm sure many of you that are watching this video are searching for Amazon. It had something to do with this news that came out last Thursday, Friday, whatever it was. But it did send the stock soaring. And now it's at $103 a share.
So then we look at this. They do have operating profit breakdown. This is an article right here. So 2020, 2021, 2022. They're still losing money big time in international. Yeah. They're losing money in North America right now. They were making money before, which is great. And their AWS is the big surge right here. Big operating profits. I need to see it like this.
That's a hard thing to...
Like, that's what I want to see.
Yeah.
That's what I want to see. And that's what I'm looking at going, this can't just, because this is a high margin business that a lot of people are competing in.
And when competition gets better and that big green bar starts coming down and the rest of them don't start coming up, then what? Well,
I will say this could still go up.
It could.
Because of, as they grow, even with margins compressing.
Stabilize there. And
right.
Then what?
Then the gross the operating margin or the gross margin on this, which is every dollar sold, how much money they're making off of, when competition increases, that means gross margins are going to decrease. It's wonderful to have 80, 90% gross margin in a business. But all you know then is every other person is going to get involved. And that's what happened with Google, Microsoft, Oracle. All these companies got their server business going, right? Yep. And that's the competition. Now, is AWS still the leader? Absolutely. Yeah, for sure. Absolutely. But I look at it going, man, their bread and butter is getting people into the place to buy stuff from them. And they're not making money off that. And that just, and somebody's gonna say, well, they're spending a lot on, this is operating margin. This has nothing to do with their building warehouses, things like that. This is their operating margin. That's what concerns me. Let's pull up Amazon on our software so we can take a look at it. Now, look at this gross margin here. Now, guys, remember, gross margin is for every dollar they sell, how much they make in profit before paying their taxes and overhead. 13.2%. Okay. Let's look at a company like Microsoft. Microsoft's gross margin on our software, 68.2%. Okay, let's pull up Apple. Apple's a very, hardware business, 43%. Guys, let's pull up Ford. Ford Motor Company. They have a higher gross margin than Amazon.
Wow.
Right now, and I get it, guys, there's a lot that's gonna happen. But I look at it going, God, they got to get better at that gross margin. And this is with AWS making how much gross margin for them? What is the gross margin? Let's look it up. Let's just Google search. What is gross margin on AWS? The gross margin could be between 60 and 70%. That's the first thing I see. That's what I thought it would be. It's all software. It's scaling. We use it for, our software right here is run on AWS. Our game, Dynasty Owner, our fantasy football game, that we created a few years ago runs on AWS. We love it. But again, how do you look at this for for Amazon as a company. So let's pull it back up and let's take a look at some other. So Amazon's back up over $1 trillion in value.
Yes.
But look at this all-time high. 189, July 13th, 2021. The low just a few months ago of $81. It fell by over 50% from its all-time high. That's a big drop, guys. Yeah. Now, does that mean anything? No, we look at stock price just as a relative to the value. The question is, was this a good value or not? That's what we don't know, okay? Let's look at the 8 pillars here. A lot of X's, but they have I like this high ROIC even with reinvesting back so much, and the revenue growth obviously is there, but everything else is low. Everything else is an X.
So I think this is funny.
Yeah.
You remember Friday when I sent you my hype stocks because we were looking for different, it hits all of my hype. 5-year PE greater than 50.
So explain that real quick.
So basically, guys, what you can do up here is create your pillars. You go to tools, you go to drop down, and here, I'll show you right here. Go to tools, come to pillar screener, and what you can do is kind of cycle through and put whatever you want. And what I was doing is I was running a screener to try to find companies that were very expensive, very high PEs, but didn't have cash flow, didn't have net income for the last 5 years. So I did 5-year free cash flow less than 0, 5-year net income growth less than 0, market cap greater than 5 billion to screen some out, and a PE greater than 50. And you search that, first thing that comes up. So it's going to give me 27 companies, and Amazon's the first one. So it's lighting up all green for something that I was looking for to find overpriced hype stocks. That's because we were looking at saying, okay, in a down market, what are the companies that are going to be hurt the most? It's the most overhyped and the more expensive ones. So I look at the saying, so Amazon is at 103. Its all-time high was 188. So it's 40% lower than its all-time high, right? Yeah. 45% lower. And guess what? It's still on the hype screener for Mo. Yep. If you like all this stuff, guys, $7 for 7 days. Check out our software at everythingmoney.com. The price is going up very soon. It's going to go up monthly starting on May 1st. It's very big because we put a lot of money in the software, made it a lot better. This will change the way in which you do investing. Trust me on this one. $7, 7 days. Check it out. So let's look at analyst estimates. Look at these analyst estimates, Mo. This is the funny part. So they expect $1.44 per share in profit on a $102 stock, by the way. Now, if you want to buy it and you want to trust these 8 analysts in the future, remember, guys, analysts have their biases, right? They want to be like everybody else. They're expecting $8 in profit in 2027, which would be awesome for today. It would be a 12 PE, but a 12 PE 4 or 5 years from now, that's a lot of time to wait. For sure. So if you sit there and want to apply a 20 PE to this, it makes it 160. So you want to buy it for 100 and to make it go up 60% in 4 or 5, that's not bad. It's not bad, but you're going to have to put up, I think, with a lot of downside, especially if the market falls. And is that realistic? Is that, well, then you look at, these companies and look at the revenue growth. Oh my gosh, look at this revenue growth. This is huge. Massive. So guys, what we're going to do now is we're going to do our stock analyzer tool. I'm going to do a 20-year analysis. Mo's going to do a 10-year analysis. Now, since Amazon is still trying to show their real profitability, I'm going to do a wide range of profitability because I really don't know what their profit's going to be. In the past, they've had 25 to 30% gross margin. They have 13% now. So I have to sit there and do a wide range. I just sit there and assume a wide range because I don't know where it's going to be. So we're going to do this. Mo's going to do a shorter term look. I'm going to do a longer term look. So just hang on tight for 1 second. All right, guys. So we just put our numbers in. Again, reminder, Mo, 10-year analysis. We did a 20-year. Now, when it comes to stock analyzer tool, it's really, really important that you try this over and over, engage in the community, and ask people how they do their assumptions because it takes some time and practice. But once you get it, this is a game changer for you because it'll tell you based on your assumptions what price to pay for the company. And this thing was used 1.3 million times last year by our users. That's how powerful it is. Now, this was hard. It was hard because of wide range. Yeah. So what'd you do for your low, middle, and high? So I did 4, 7, and 10, and I did that because I looked at the income statement and they've had tremendous growth through COVID. So I'm kind of saying, okay, maybe they tailor it back a little bit on the revenue side. So you're probably right. I actually did 6, 9, and 12. Huh? And I think because, by the way, 12% revenue growth for 20 years. Oh, that's Let me just show you what kind of number that becomes. Mo, what did they do last year in revenue? 500 and, let's see, is it 580? 513. That would make them a $5 trillion revenue business in 20 years. 5 trillion, guys. I just want to show how unrealistic. I mean, that's just a big number. Okay, Mo, what'd you do for profit margin? Okay, I did 2.5, 4.5, and 6.5. Okay, I did 3, 8, and 13. But you did 20 years, and profit margin should They should increase their profit margin.
That would be, guys, at $5 trillion in revenue and 13% bottom line profit margin after taxes, that is what, $650 billion in profit. All right, free cash flow margin, did you do the same thing?
No, I did 1.5, 3.5, and 5.5. I went lower.
It is lower. So Mo, what he did here was going, listen, free cash flow has always been worse than profit margin. However, they've invested a lot in the last few years.
Yes, they have.
An insane amount. So I still just match the free cash flow.
Yeah, I don't see them slowing that down anytime soon, though, because I was doing 10.
That is true.
So,
okay. PE.
PE, I did 16, 18, and 20.
I did 15, 17, 19, and price of free cash flow, I did the same thing.
Yes, same for me. And then 10, 12, and 14 for my return.
So I thought this was quite low. So I went 9% return.
Okay.
I did 12% in the middle, 15% return on the high side. So what this is saying, guys, is because of how high these assumptions are, I needed a higher margin of safety. How do you get a higher margin of safety? You put a higher desired return. That's what's great about this tool. As you go with higher desired return, you're increasing your margin of safety naturally. Okay. Now, I hit the analyze button, and so did Mo. Mo, what'd you get?
Okay, I got $12.50 to about $21 on the low end, 61 to 72 on the high, 34 to 44 in the middle.
Look how wide range I got. I got 35 in the low, 175 in the high, 100 in the middle. This just shows you how expensive $188 was.
Yeah.
I think these assumptions I did up here are ridiculous. Now, granted, I did a 15% return, but I think this is ridiculous.
I actually like my watch list price. This is not going to say go buy it. This is going to say, okay, now it's getting to the level of let's go do some research.
And even though I have 100 in the middle, I still think those were high assumptions in the middle. My watch list is at $60. So guys, again, everythingmoney.com, $7 for 7 days. You get all these tools and way more that we didn't even show you. Thank you very much for your time.